Hey, it's Kevin Hunter with Hunter Realty, your North Texas home hunter. Here talking finance today, talking mortgage lending, one of the really important pieces of the house buying process. I've been able to steal away Bryan Connatser, one of the divisional VPs at Cardinal, and really want to dive down into the value of the right partnership around this really important piece of lending. So Bryan, with that, help us understand, why your role in the buying process, people are looking to get a house, what kind of value or how important it is to have that right partnership?
It can be the difference between you getting your offer accepted and not. Being with a local lender is very important. Somebody that is based right here in North Texas who's got all of their operations, whether it's processing, underwriting, the closing and funding piece, all being managed right out of Plano, Texas with Cardinal Financial. It has made the difference between some of my clients' offers being accepted and not. And I've even got realtor partners that will not deal with an out-of-town lender. They won't work with a bank. They want someone that has the operational ability to execute for their clients and then be able to let the listing agents know that's a strength of theirs. And that is a strength of ours here at Cardinal.
Wow, good. So with that, I know there's a lot of different types of vehicles that you can use for your lending. Help the viewers kind of understand what are some key lending programs that y'all have here.
Absolutely. The mortgage business has a wide range of products. The main products that we use are conventional loans, which are that's the most widely used. But we also have loans for veterans with 0% down. Those are called VA loans. We have FHA loans, which are generally speaking for your newer, for maybe first-time home buyer or maybe lower income type clients. They have a little bit more flexibility with both credit and down payment needs. We've got down payment assistance programs that can apply to both conventional and FHA. We also have a USDA rural housing program, which is actually for eligible homes and eligible home buyers. It's a zero down payment loan also, but you've got to buy, out off the grid a little bit further out. But let's go one step further. What if you're a self-employed person who takes a lot of legal write-offs and therefore you don't claim very much money on your tax returns? We have programs that can help get you into the homes as well, just by analyzing your bank statements and the cash flow within those bank statements. So we call those non-QM or non-qualified mortgage products, but we've got a wide range of abilities to help people of any walk of life.
Yeah, that's great. So, hey, that's probably somebody calling right now to get a loan.
Yeah.
But we're going to have to put them on hold because this is super important.
That's very important.
And speaking of important, I keep hearing all these different things about some of the new programs that are coming out and how it's impacted by your credit and how much you put down. I don't know how much all that is formulated and how well you can articulate it, but help us understand some of the nuances of some of these new programs.
Absolutely. They actually officially rolled out to be effective today, May the 1st, but they've actually been affecting the mortgage interest rates that are being offered for the last 45 days, probably based upon the dates that the loans will be funded and then delivered to Fannie and Freddie. And it's only for conventional loans, actually. But the term LLPA means loan level price adjuster. And there are new levels of LLPAs that have rolled out to be effective for any loans that are going to be funded on May 1st or after. There actually was a misperception that I even talked about, because it's what I had read previously, that said that there were going to be lower and better rates for clients with lower credit scores and less down payment. And then great credit, putting more money down, the rates were going to be worse for them. And I actually was spreading that word myself. And in truth, I found out Friday that is in fact not exactly the case. Unless you are putting down like 25 or 30%, rates are slightly worse for everyone in every credit category. But here's the thing: they've actually already been built in. So it's kind of new news because the media just caught on to it. But it's something we've already been working with for about the last 45 days. It's not really going to additionally negatively affect things that we're working on right now.
Right. Excellent. So for new buyers or buyers who haven't purchased a home in a while, help them understand kind of the process and what that looks like and when you should get a lender involved in that buying a home process.
That's a great point. And the truth is, it's never too early. Matter of fact, if you think you might want to buy, let's say in the next 6 months, the next year, that's the time to go talk to a mortgage lender at that very moment. Because the truth is, we all need to know, number one, that we qualify. Number two, what we qualify for. Number three, what it's going to cost monthly. Number four, what's going to cost overall out of pocket. And if you're armed with that information, literally before you just jump out there and start looking at homes, that education can make you a lot more comfortable with the entire process and make it more enjoyable.
Yeah, I know that just going through our own personal home buying experiences, you were like, hey, let's figure out what kind of home you can actually look at, right? I didn't want to go out there and look at this really nice, expensive home and then not be able to qualify it. So that was kind of the important first step for Stacy and I, was to really understand what market should we be evaluating as far as homes, what price range and stuff like that. So that was a big part of that.
One of the first questions I ask is about their budget. What does your monthly budget look like? What do you see yourself being comfortable with as a payment? And then we can back into a purchase price range based upon what they are going to be comfortable with.
Right. And again, for first timers, what does that process look like? How do you actually do that closing of the home piece?
Well, so I lay it out in about, I think I want to say 5 steps, but I'll verbalize them. So the first step is calling a mortgage lender, getting a loan application placed. In that loan application, it helps us be able to paint the picture to know, number one, what you can qualify for, number one, and what it's going to cost you. And so we go through that loan analysis after the loan application. After the loan analysis, that's when we get with you to get your income and asset and ID identification documents. And then we actually put the file in underwriting to get approved by an actual underwriter so that you have no financing contingencies when you're going to make an offer. And that can also help make your offer stronger than other loans that have not been approved by an underwriter. But once you're approved and you're out looking for homes, you can then ask us to run numbers on any address that you want to see, so you can know what the total payment's going to look like, you can know what the total cash to close is going to look like, and since you're approved in underwriting, we can close you a lot faster. I mean, 2-week closing is not out of line for someone that's credit approved. But then once you're under contract, it usually takes, you go through an inspection period, there's usually an appraisal involved. So a normal closing time is about 30 days, but 3 weeks to 2 weeks is not out of line if we have all of our ducks in a row. But with Cardinal Financial, one of the things I love is the moment everybody's signed. Once the seller is signed, once the buyer is signed, it funds, pre-authorized. There is no faxing, There's no sending a closing package back to a funding department and waiting for a few hours for a review to fund. The moment everybody's signed, that buyer gets their keys right then.
Wow.
Yep.
That's exciting. So I hope you've enjoyed kind of this conversation. We're going to have lots of future meetings with Bryan and Cardinal Financial because, as you can tell, it's a very volatile market, and you really need to be aware of this kind of content. So if you want, look below, hit subscribe, make sure that you're up with the latest and the greatest. If you have some needs, feel free to reach out to me or Bryan, and we'd be glad to kind of follow up, right? Because when you are going through the process of buying a home, this is obviously a crucial part, and to make sure that you have somebody who's been doing it for over 20 years, who knows what they're doing, know all the tricks and all the best practices. These are the people that we work with, and I think you will find yourself in good hands with Bryan and team.
Absolutely. Thank you.
Yeah. All right, now for the important part. Did the audio work?